Silver has a level. Now, its rally this year got up above $26. Remember, its low was near 17 last September. It rushed up to over 26. Right now, we're trading either side of 23 today. I think we traded over 23 at one point today. You get back over 25 again, assume white knuckle flight is about to begin, that we're going to rush again. So I would say get gold above 1950 if you're waiting for some level of confidence to enter, and silver back over 25. Not the highs of the year, which were above 26, but get back over 25 again. And at that point, I would assume if you're not in, you better be in.
Michael Oliver is the founder of Momentum Structural Analysis, MSA, a platform that provides proprietary technical research on equity, debt, and commodities for both institutional and individual investors. Using a tool that tracks momentum and reveals long-term trends instead of focusing on price, Oliver and his team of analysts have been able to call several market bottoms and tops in stocks, commodities, and other sectors. Oliver has made another dire prediction, this time for the stock market, which he believes is primed for significant downside moves in the coming months. According to the structural analyst, the U.S. stock market topped early last year and is currently in a bubble. In fact, Oliver describes the current market condition as the biggest stock market bubble in U.S. history, created as a result of the Fed's many rounds of quantitative easing over the past 12 years. But the bubble can only last for so long. Like many other prominent analysts and investors, Oliver is warning that the stock market bubble is about to burst, which could result in 30 to 40% declines in prices. Oliver also notes that such declines will send shockwaves through the economy and force the government to intervene by cutting rates or even begin printing again. This is the event Oliver is looking forward to, as such periods have always been bullish for precious metals. Oliver believes it will be no different this time, which is why he is predicting big moves in gold, silver, and miners within the coming months. For investors still sitting on the sidelines and needing more assurance, Oliver says to watch for two critical levels when gold crosses $1950 and silver crosses $25. It can only be up from that point, Oliver adds, reiterating earlier claims about being extremely bullish on precious metals. As soon as we begin to see definite signs of a precious metals bull market, Oliver says he will focus more on silver and miners, adding that both are underperforming right now but will outperform massively when all of his predictions begin to unfold. As we bring you clips from Oliver's recent interview with Liberty and Finance, please watch, share, and like this video. Also, ensure you subscribe to the channel, turn on post notifications, and don't forget to drop your comments and observations in the comments section below. Thanks, and enjoy the video.
I think the key for gold now, and gold is a leader market. It doesn't wait for events to happen. It anticipates them. After all, it's been around several thousand years. You name me a market that's been around that long, okay? It's held its value for millennia, okay, against government degradation of money, okay? Okay, now, what we have is the topping of the stock market early last year by our metrics. We said, that's it, that the market is making a major top. Now, we did this in year 2000, in January, and the market labored around and even made a marginally new higher high later in 2000 and then collapsed. It did it in 2007. It topped. We knew it was topping in late 2006. We said it was topping in late 2007, and it fell apart by late 2008 with counter-trend rallies. But the stock market was incredibly stupid at each of these highs. It never realized it had been a bubble. This time it's the biggest bubble in U.S. stock market history. 7-fold increase in S&P, 16 in NASDAQ 100 over a span of 12 years. Created by excess monetary policy, free money, false cost of price of money created by government. Errors were made over many years and with great dimension, not only government errors in spending and planning, but corporations, family planning, all these things were effectively hallucinagened by injections from government monetary policy. Okay. Once this bubble starts to break, it's the bubble that the Federal Reserve and other central banks of the world, they always move in to defend. They don't care if the corn farmers aren't making enough money or the sugar farmers or the oil producers. They care if your stock market's going up because often it'll interact with and hurt government debt markets and so forth. So when they finally perceive that they have burst the bubble and that the bubble was far bigger than they anticipated, they're going to reverse policy. It's a given. That's what they do. That'll just mean the Fed. They're stupid. They're always lagged to reality. You can go back and look at history of their rate rises and then their rate cuts when they occur. Okay. If they go on a rate cut policy now, it's not going to help the stock market. It didn't help in 2007 through 2008. They cut rates like crazy. They cut rates starting in January of 2001 all the way to the bottom. Markets still went down. So when they start to cut rates because they get vibes and phone calls, no doubt, behind the scenes from major banks, they're going to get concerned. They're going to plateau. They're going to do the pause. Okay. And everybody thinks, oh, that's good for the market. No, it's not, because it's acknowledgement by the Fed that something is amiss. The beneficiary of this, again, will be gold, because they'll go back to a policy of monetary excess to defend muni bonds, U.S. government bonds, and the stock market. Unfortunately, a lot of gold bugs and who are depressed all the time now, the last 2-3 years, because it's stalled, which is really the fact. It's not gone down, it's stalled. They don't recognize that gold is not directly correlated to the direction of interest rates in the stock market. They seem to think that if the stock market goes down, oh, that means, quote, deflation, and it means gold will go down. And if rates stay high, gold's going to go down. Well, throughout history, this is not true. What gold is watching right now, I think very closely, is it's watching the stock market.
During the interview, Oliver names the banking sector as the major source of weakness for the U.S. stock market at the moment. He explains that though policymakers continue to downplay the risks of more bank failures, insisting the banking industry is strong and resilient, all important metrics show that there is a lot of trouble ahead for even the so-called too big to fail banks. Oliver gives the example of 3 top 10 U.S. banks, which took out last year's lows during the regional banking crisis in March. He also makes a fascinating comparison between gold price movements and the shares of Citi Corporation. Here are more clips from the interview.
The thing to watch, though, is what we said back in late January, We issued a report saying, watch out for a bank ambush. At that point in time, the banking sector was behaving better than the stock market, no matter how you measured it. For instance, in 2022, when the S&P made a low in June, made a lower low in October, bank sector didn't. It held the June low, behaved better on the downside. And then on the upside into early this year, the bank sector was stronger. So it was a happy sector. And we warned there's an ambush coming. Well, the ambush hit, and we had effectively what was a crash in the banking ETFs, particularly the regionals. But the Fed dismissed it and said, oh, it's badly planned couple banks who are badly managed. And in other words, don't assign the responsibility to the boom bust cycle that's created by the central banks. Blame it on some bank manager. And it's a regional, so it doesn't matter, right? Okay. Well, we've noted that in that drop in the banks, and I suggest to all your viewers that they go on their quote screen and punch up, for example, Citicorp, C is the symbol, or Bank of America, BAC, or Wells Fargo, WFC. These are 3 of the 10 too big to fail. Okay. If you look at Bank of America and Wells Fargo, they took out the 2022 price lows in that March drop this year. So they joined the regionals in terms of price breaking through the lows of the prior year. The other major too big to fail banks did not do that. They held above the 2022 lows. No doubt the Fed wiped their brow and said, oh boy, good. We focused in on Citicorp because when it came down this March, it held just in front of the 2022 lows, which were, by the way, the same lows it made in 2020. So it's really going back 3 years now, 20, 21, 22, and now we're into 23. It's 3 years of lows where the price level is just a few dollars below where Citicorp is right now. So our assumption is that the sector to watch, instead of the leaders, the tech leaders, the Apples, the Amazons, the heavily weighted symbols, the semiconductors and all that, they're turning down. So you're losing your leaders, but watch the big banks, because that's an arena that the Fed is most concerned about. And they're not real smart folks, so it's going to take a smack in the face before they realize that, oh my goodness. Well, if you just look at a chart of Citicorp, punch it up, weekly chart, go back a couple years, and then punch up. And now, in fact, we've got one. I sent you a chart of Citicorp and gold. And if you want a correlation between what gold is doing and some other market, I suggest you take Citicorp and put it underneath your gold chart, as I've done here, and you'll see their inverse. Whereas as Citicorp went down to its lows in 2022, gold was making a high. March 2022, remember? Okay. Gold was over 2,000 then. Gold then dropped down, had a false downside breakout. During that time, Citicorp was rallying. Inverse. Then again, look what Citicorp's done recently. It's come back down to its lows again. The lows of the last few years, just on price. We're not talking momentum. Momentum is worse than price, okay? But it's come back down to this floor that it's been living on. It's not going to hold it. The question is, when does it break it? Well, as Citicorp went down to multi-year lows, gold went back to multi-year highs. And over the last 4 or 5 months, Citicorp has had this holding action. And what has gold done? Not collapse off of its multiple highs up there in the 2,000 level, but drifted. In fact, you can see it very clearly on this price chart. It's not been the type of drop that gold had in 2020 when it dropped from 2,000 and went down to 1,600 something, went back over 2,000 again, then dropped down to low 1,600s. This time it went over 2,000, and gold for 5 to 6 months now is dawdling. Its percentage pullback from its high, the high monthly close in gold was 1999 this year. New all-time high monthly close, just below 2,000. Well, we're trading right now about 1,900. 5 months later, off the highs of the year, and we've given up, 5%? That's the same as Citicorp. It couldn't get off of its lows recently, just like gold can't get off of its highs. So I think if you're going to look at a market that might be a perfect mirror image of gold, watch Citicorp. And you can bet that the Fed will be concerned if Citicorp melts through those lows.
Michael is watching out for 2 price levels in precious metals. When gold hits $1,950 and silver $25. At its current price of $1,894, gold is about 3% lower than Oliver's estimates. In addition, the leading precious metal has continuously tumbled lower over the past 16 days, when the $1,950 support level broke. It's worse for silver, which at $22.75 is about 10% lower and has remained below $25 since it broke that level on July 27th. Do you think we can regain these levels anytime soon? What event do you think will spur such movements in gold and silver prices? Please drop your predictions for gold and silver, as well as your comments and observations on Michael Oliver's interview in the comments section below. Also, ensure you hit the like button, subscribe to the channel, and turn on post notifications for more videos on gold, silver, and other precious metals. Thanks for watching.